We want to go over the results from last week's trade and take a look at some of today's trades in the portfolios. We're looking at the core 5 strategies in the 25K portfolio. You see Cobra 3 took a trade last week on that big gap up. It ended up at a loss a little late in the day, big gap up and then a run. And so that's the nature of this market, is a bit of a stealth rally where a lot of the move happens overnight, and then by the time anything that looks like a trend intraday gets fired off, the market starts to go flat or mean revert a little bit. And so one of the concepts is to trade when you don't have a trend yet. And so that's one of the things I'm currently researching. Tick Pulse did have a good week last week. We see some other trades. SR Counter Trend Gold, that was, let's see, when was that? That was the week before. That was on February the 20th. That was Monday. So last Monday we had this gold trade on the long side. Cobra Euro's been flat. Soybeans Day Trader 3, we had this trade on Monday as well, small gain. And then today we're currently short, almost got stopped out up here, but the market came back down and it's up slightly. The grains are very choppy, not a lot of real strong trends or trend continuations. Gap continued to be kind of similar to Cobra 3. Would have been nice to get in at this area. So yeah, gap continued to be, had a loss last week. Tick Pulse, let's take a look at the other bonus strategies in the group. Tick Pulse had a nice week last week, capturing this short trade on, let's see, March the 2nd, which was Thursday. And then on Friday, very narrow ranging day, less than 10 points in the E-mini S&P. Long trade that's pretty much a scratch trade on the day. And then we had this long trade on March the 1st. So Tick Pulse did a good job of capturing that gap up last week. It got back in, and the second trade was down on the day, but overall a good day and a good week in Tick Pulse after struggling through February. It was the strongest strategy last week. Gap fill in reverse. No recent trades since 2 weeks ago. Crude oil gap fill in reverse. Let's see, there was one trade last week, minus $90 on this trade. Short today, nice trade on the short side, making up for the weekly inventory, or the after hours. This after hours trade was a loss from Friday on this rally back, but gap fill in reverse is short again, and getting some of those losses back. Weekly inventories last week was up. We had a nice trade on the weekly inventories report on the short side. I'm going to show you that trade right there. Nice grind lower. It's always challenging to watch these trades in crude oil because there seems to be a quick pop in crude oil. So when you're short, it always seems like the market's going to pop and rally. And so, but that trade captured that the short side. The 50K and 100K, we had a trade in Cobra Crude Oil on the short side. I've anticipated higher prices in crude, and it's hanging in there above 52.50 right now. So we'll see if it can make its way up to the $55 to $60 range. There's lots of retracements and mean reversions. $2 or $3 a barrel is nothing for crude oil. That doesn't mean a new trend at all. SR Counter Trend Gold, crude was flat. Soybeans swing, E-mini S&P was flat. Exhaust and reverse is our new strategy. Here's today's trade. Beautiful entry on today's trade. It captured about 7 points before coming all the way back to break even and then rallying again. It took out the lows again. They had to go back and take out the overnight lows during the day session. And then we'll see, maybe they'll run and take out the the highs as well. It's kind of a market that's just taking out the lows and the highs on days like today instead of really going anywhere. But this strategy is good for that kind of a market. And one of the things I'm going to research next is um, to look at the ADX of the open equity on a trade. And so it's hard to capture, um, hard to come up with a strategy to exit when there's just a straight up equity move and get good results. Um, so one of the things I'm going to test next is the ADX of the equity curve. When it really goes into trend mode, put in a very tight stop loss or tight trailing stop loss, or just get out. And so that's what I'll be testing next on a strategy like this. There's ways to do that. I don't know how to do that for programming that within the strategy, but I know how to do that within the money management algorithm. So I'll test that and let you know if I find something, and that might be an add-on that I add to the money management algorithms is some exit strategies based on the open equity curve, and I'll keep you updated on that. Gold spike. Let's see, not many trades in gold spike. Oh, actually, there was one trade. We had a loss there, minus 260. And EVP2 gold, no trades last week. Soybeans swing, losing week, really choppy. You can see this just down, and then we're going to chop up, and then we're going to come all the way back, fill the gap, and then we're going to go up and down and up, and it's a super sloppy market. You see this, fills the gap, rallies to the highs, comes back. Looks very manipulated. If you have a good counter trend strategy, that might work well in the interim. Shorten highs and buying lows, and it seems like a very good counter trend market right now. I have to look into that more deeply as well. Soybean meal, same thing, just really chop all over the place. And so those are going through losing streaks. Historically, very good strategies. So those are the results for the 25K, 50K, 100K, some of the trades. Take a look at that in the spreadsheet now. So we're up on the week in the 25K portfolio, 1240 on 12 trades, so about $100 a trade. This doesn't count slippage and commission. That's on the week. And the month started in the middle of the week. And so last week we had Monday and Tuesday, we're in February. Well, Wednesday, Thursday, and Friday, we're in March. And so the week will be different than the month. And this is the monthly results with slippage and commission. So you take this number and you subtract 9 trades times 45 to get this number, or 9 trades times 25. So you get 465 on the month, and then that's the week. We have the monthly results in the portfolios updated on the for February on each portfolio page as well. And so last week the 50K made a little bit more because of the Cobra Crude trade, but that trade was in February. So from March so far, they're the same trade. There's no Cobra Crude or SR counter trend crude oil in the 50K. And so for the month they're the same, even though last week was different because last month was slightly different. The 100K portfolio was down on the week because of the soybeans and soybean meal swing strategies, which are really choppy, as well as gold spike too. And so you see that it was down on the week by $70, not much. And then on the month, it was up. It's up $200 on 17 trades. If you take out slippage and commission, down about minus 225 so far in the first 3 days in March. And the $1 million portfolio is basically the 100K portfolio with 7 contracts on some and 2 contracts on others. So in Gold Spike 2, the gold strategies, we have 2 contracts. The swing strategies, we have 2 contracts. And a lot of the other strategies, we have 7 contracts traded. And so even though it's not a complete multiple of 7 to trade the $1 million portfolio versus the 100K portfolio, and so you see that because of that, the $1 million portfolio was up on the week, 84.60 on 138 trades, and 48.50 on the month so far in March on 104 trades. Take out slippage and commission, that is 2250 on the month so far, the first 3 days of March. And so there's a very detailed analysis of the trades in the portfolios and the strategy results. Again, we're slightly up overall. We continue to trend up on these equity curves, and the market is still very low VIX, very low volatility, not a lot of action. And so we'll see. We're in a good place. So it's a good place to be when the market is not doing what you want it to do. And we're happy with the results. We're happy that Tick Pulse did well last week. Let's pull that back in here. On the week, it did 925 on 5 trades on Tick Pulse. And we also added exhaust in reverse to the 100K and million. This is only for this. I said to add this in March, and so when I say for the week, this is for just really the month on exhaust and reverse, because we didn't trade it in the 100K portfolio in February. So exhaust and reverse officially starts in March, and so the week results will match the month results. There was one other trade on the actual week, and I think it was plus $25, so it's close anyways on that. And so the beginning of March includes that. I have other strategies to add to the $1 million portfolio, but I'm putting that off until next month, and we're trading it like this. And so in Q2, the $1 million portfolio will see some additional strategies, and some of the strategies that I'm taking a look at are money management algorithm versions of Cobra CT 3, 4, and 5 on the DAX, the VIX swing, Cobra CT 5B E-mini S&P, gap fill in reverse, crude oil, multi-contract version. Maybe do the multi-contract version instead of the single unit version. So we're going to take a look at that. Brent, gap fill in reverse, and SR counter trend silver. And so those are some of the strategies, a little bit different types of strategies than we currently have, and we'll mix up the $1 million portfolio starting in Q2 based on further analysis this month of what I would like to do in that portfolio.